Hey everybody, happy Sunday. Don't forget that you need to set your clocks forward. That's right. So, in some instances, you could say that we are losing an hour, but we are gaining an hour of sunlight. So, here in Florida, that makes me really, really happy. Again, good and happy Sunday. I hope you're having a great weekend. Today is the 12th of March, 2023, and we'll be covering the broad market analysis from the 12th, so starting with futures tonight, into the 17th. And as a reminder, I will be on vacation from the 17th through the 20th. I'll be headed to Fort Lauderdale for a mini vacation. Let's go ahead and get started. So, with earnings this week, you can see here it's a very busy week. All right, and there's quite a few names on here that I am interested in. So let's go ahead and just take a look. So on Monday before the open, I'm looking down, and typically what I'm looking for are my favorite names. I do like trading earnings, but I like to trade them in a strategy that I prefer, which is using debit spreads. Now, if we come across a name that I'm interested in, we can look at that over the week. And if there's a name that you're interested in, I can at least give you some levels that would be very important going into earnings. So Adobe is the first one that I see that really catches my attention. Five Below, this one as well. Over here, Dollar General for sure. FedEx, Meta, I don't know if is this the same Meta? I don't think so. Let's keep on moving down here. Jewelers. I'm actually really interested in this because I think that the jewelry business has been booming, and I'm curious to see if it continues there. Moving on, looking down, I don't really see a whole lot more that I'm interested in. So let's go ahead and move on to the next section here. So the next section is going to be your major economic reports and Fed speakers going into this week. I think it's all about PPI and CPI. But just to be sure, go down this list. This is Eastern time, and anything that may be coming up could cause a little bit of volatility in the market. You can also see that we have retail sales coming in on Wednesday and Monday. There's nothing scheduled at the moment. I need to double check on this just to see if we have any speakers. I believe we're having an emergency Fed meeting on Monday, so that would definitely be important coming into this week, okay? But I need to double check on that. So again, core CPI on Tuesday, Wednesday retail sales. We have PPI coming in on Wednesday. And then going over here to our next, we have Thursday and Friday, and I apologize. Let's open that really quick. So Thursday and Friday, we have initial jobless claims. Down here on Friday, you can see that we have leading economic index consumer sentiment. So again, very important times and days. Please take note of those. Now, the next thing that we'll be looking at here is going to be the strategy from last week. So despite what I think is going to happen, remember this neutral strategy for the SPY and QQQ, the way we're supposed to trade it is we look to go long above the green and short below the red. Okay. Notice that over here on QQQ, price did move above the green. Early in the week, we did hit T1. And remember, targets to the upside are resistance until proven otherwise. Targets to the downside are support. Notice here, the SPY followed, but it could not quite get to the 408 level. We broke down in neutral. Matter of fact, we opened up there on Tuesday. And then once we broke below the red line, you could see that all targets were hit. And then we had to find some here during a live session to get an understanding of where price might go to. Over here on the Q, same thing happened. You ended up opening up on Tuesday in the neutral, then breaking down below the red. But as you can see, breaking down and or going short on these levels paid off as we hit all levels to the downside. Now, I did start the week by thinking it could have been tight because of the weekly structure. I thought it was really tight for the first couple days, and then again, once levels broke, we got a little bit more of expansion. Now, looking at it from the previous week, we pretty much just kind of, we came right down into the previous week, came down into those lows, and this is kind of where we ended. So when we look at it from a bigger picture, it is pretty choppy. It's still pretty sideways, but we are at major levels, and we'll take a look at those pretty soon. Coming over here, this is your new SPY neutral strategy going into this week. A couple things that I want to point out, and just take a picture of these and get these numbers on here. Looking to go long about 389.96 or going short below 384.02. Now, please keep in mind if we were to gap down into the red level. I'd be looking for support at this level until proven otherwise. If we were to gap up tomorrow into the 389.96 level, be careful. You're gapping up into resistance. So again, these act as support and resistance. Okay, so these levels are very important. Even though they're green and we're looking to go long, you got to understand that is a little bit of resistance, especially in this downtrend. And when we're looking at the downtrend itself, notice how this cloud, again, continues to be resistance until it's not. And on a gap up, you could see here if we were to zoom in, the cloud is right there at the top of that neutral, meaning I would expect resistance there. Okay. Next one we are going to look at is going to be the bigger picture on SPY. Now, let me go ahead and read a couple notes to you. The quarter candle is 19 days left until the close. SPY ended up breaking below the bull channel, and now the 38.2 of the Fibonacci level, or $390.25, is resistance until proven otherwise. Top and wicks are evident, but still no break of the rounding bottom. And what I'm saying is, you can see that we have all these topping wicks in here. We know that bears are in control in this area, but we still have this rounding bottom. And really, I think, we could be in some dangerous territory if we actually end up breaking those lows and headed under a 351. Then I think we get some serious capitulation and we could see down towards 319 and so forth. Okay. Now, again, if this, then that, we'll take it from a daily approach, just like we did last week. But again, this is a bigger picture. And what I think is important here is we still have 19 days until the quarterly candle closes. And so far, big topping wick. It is trying to hold support here at around the 381.5 level. And we'll see if it can hold that. Okay. All right, let's go ahead and move down and look at the QQQ neutral strategy. Okay, this is the new one, just like I showed you on the SPY. Take a picture of this. Numbers to the upside are resistance. Numbers to the downside are support. Same thing. If we were to gap up into the 291 level, take some caution, as we could see resistance there. We have a cloud right over top. You could see that. And if we were to gap down into the 287 level, look for support. Again, it's proven till otherwise. Here I will teach you and coach you. So we'll be using pre-market zones and stuff like that to, watch and see if we want to take that break to the downside or upside. Okay. All right, let's go ahead and move on. We'll be looking at the QQQ bigger picture, same thing, using it quarterly. You can notice that we also have a rounding bottom here. That EMA is holding, topping wicks, just like the SPY. We know that bears are in control. We do have a supply zone here, just like the SPY. And basically, that supply zone is working. Timing is the variable. And once again, as long as this rounding bottom is in control here and that we have topping wicks here, we really are in this zone of just really choppy volatility market. And I do believe that in order for me to get, really concerned, we would have to break down below this level. Then I think we could come back and test or get into this inside and out formation all the way back here from 2020. But as long as we're rounding out and we're not doing that, I just expect for it to be very choppy and sideways. Okay. And again, coaching every single morning on where I believe price would head to using some of our pre-market zones. Okay. All right. Moving on down, the DXY and the dollar. Let's go ahead and open that. Okay, and there it is there, and I'll go ahead and read some notes to you. The resistance worked, but so did the support of the 23.6. Price remains in the bearish channel and just ping-ponging between these two fibs, okay? So choppy conditions remain until one of the fibs break. So what I'm talking about, if you take just a quick look at this is your 38.2 and this is your 23.6, and basically we just measured from here and then we found those fibs, and this is a bearish channel. And in my Fibonacci and methodology, basically what I'm saying is when we measure a down range like this, it stays bearish until we can get above this level here. Notice we came right down into the 23.6 and then we bounced into the 38.2 and then we're just kind of stuck here. All right, so once again, proving that the market's pretty volatile, it's pretty range bound, and we really haven't had this significant break in my opinion. All right, for me to get like super concerned. Now, there are things going on that are concerning, but once again, I'm really paying attention to the technicals. And in order for me to start to get into that mode where I feel like capitulation is here, we're going to have to see some major levels break. Okay. All right, so that is the dollar in far as my opinion for this week. Just wait for one of the levels to break. As long as it's between these two, I do believe we continue to see those choppy conditions. The TNX and the Treasury, same thing. The resistance level, I've had this here for a very long time, for months actually, and you can see it's working. So on the TNX, this is pretty straightforward. Resistance remains there. Support is 3.5 and resistance is 3.99. Very simple. Let's go ahead and move on to the skew. I'll try not to put too much emphasis on this and talk about it. If you want, you can go to Twitter. I tweeted out this chart because I'm actually a little bit confused. This is the first time that I noticed. I was actually shocked. I thought when I would come over here and take a look at the skew today that we would have seen this headed further down into this area. Now, you can go back and you can study this for many, many, many years, and you will see that when prices, the skew is coming down into levels, especially below like 123, 115, 112, that the SPY, if you were to put a chart behind this, basically what's happening is the SPY is moving down into these levels, and max participants are on the put side, and the fear and greed indicator is showing extreme fear. Now, for some reason, when I open this, I see this big bar to the upside. Typically, this would mean that we went long down here and that we're headed into areas where you would be protecting those calls or those long positions and kind of trimming and raising stops and so forth. So this is completely backwards. It feels broken. You can see some of the comments out there on Twitter to see what other folks think. There's some interesting stuff out there or theories. You could just say that it's broken for right now. I like the idea that it needs to be reset. So anyways, I put it on here. I can't pay too much attention to it or put too much emphasis on it until I really truly understand it. But it's something that's always helped me with my broad market analysis, and now it's actually throwing me and for a loop, and I'm a bit baffled what I'm seeing here. Okay, so anyways, let's go ahead and move on. Moving down to the fear and greed index, you can see that we hit extreme fear. Now, the idea here, folks, is that when we're in extreme fear, we can stay there. Just like if we're in extreme greed, we can stay there. The charts are very important. We need to use those charts. We'll be looking at if this, then that scenarios this week. There's a lot of different catalysts out there that, obviously that are creating a lot of fear. Now, I've been here several times over the last several years. And what I can tell you just from experience is that extreme fear comes into demand zones. Extreme euphoria is pushed into supply zones. Okay. Remember, demand is on the downside, supply is to the upside. So once again, extreme fear pushes price down into demand. That is the whole idea, right? Institutional buying and selling. We're looking for that fear to push prices down into those demand levels, into smarter money, as they say, where they load up and retail typically sells. Now, that is the idea. It's always, you can go back since the inception of the market. There are zones to the downside. Some zones break, but most hold on higher time frames. Okay. Right now, the max participants, I should say, the majority of participants are on the put side. The fear and greed is really low here with extreme fear. Okay, so people are scared. There are events happening, so people are taking a lot of caution. The idea here for me is to make sure that I'm taking the time to try to identify these levels of demand. Let's go ahead and come over here to the ES futures. So over here on the ES futures, folks, this is what your weekly chart looks like. These are new blueprints. If you're interested in them, you can take a picture or you can ask me for them. And you can see here that we have created many pockets of supply. And when I say pockets of supply, we are using formations, okay? Formations. So your inside and down formation here, that is supply. We actually have another inside and down formation here. We have an inside and down formation here. So basically, we have a lot of resistance above us. And in order for us to get through this type of resistance, you're going to have a very big catalyst in the market. I can't help but to think about elections. Okay, I really can't, because a lot of people aren't talking about elections, right? And these moves and these catalysts are pushing price closer and closer to major levels. Sure, if we get a big break and we head down into those major levels, we will find them and we will identify them. Far as right now, though, all I'm telling you is that we keep coming into little levels of support. We pop, and if you're trying to buy puts at the very bottom of these candles, in many cases you're getting rocked because the market will bounce back. Say like this guy right here, this one, this one. All these topping wicks are basically showing you that price actually popped during this, but ended the week down towards the lows. So people buying puts at the end of the week or towards, the bottom of the day, they get rocked the next day. In most cases, because they're resetting those values, the premium gets crushed. Be careful. Okay. Remember, the idea here is to actually try and short into supply or resistance and actually buy calls to the downside and demand. Your risk to reward is better, believe it or not. All right. So, again, I'm looking for this extreme move. On the weekly, we would have to pop back up into this 39.73 for me to think about buying new puts to the downside. Now, as a disclaimer, I have on a hedge for 2023, and it is up over 100% because of that move. Okay, that we're starting to see. We're starting to see a lot of fear, and actually, what it's showing up on those premiums in the puts. And that's the one thing I do love about puts is that once things start getting really ugly, you can make a lot of money very quickly. Okay, now on the call side, what's been difficult as well is trying to I guess, trying to time the market and buy the dips at major levels. But all I can do is stay consistent. If I have a level here, that means I'm going to try there. If I have a level here, that means I'm going to try here. Okay. It does not guarantee that this level will work, but I continue to do business as usual. I find those levels by using supply and demand, Fibonacci's, and so forth. Okay. All right, so this is what your weekly blueprint looks like. Please take note of it. You can take a screenshot if you like. This is going to be the daily. Now, the daily, let's talk about it for a few minutes. We came into a trendy edge. Remember, trendy edges identify supply to the upside. So any level to the upside is supply. They are automated. They're already there before price gets there. Okay. Now, the question is, once we move down into the edges to the downside, the question is, will they bounce from here? Right? And we have to find our automated levels. Okay. Now, far as the daily goes, we busted through the 200 SMA. We busted through this edge. We continued to move to the downside. We had a little bit of a flush here. And if you go left and you just kind of follow my crosshairs, you could see, this is support. This is really, in my opinion, easy to identify. You would expect a bounce down here. We got that bounce. Matter of fact, on Friday, this was a quick bounce here to the upside and worked out pretty well. Far as trigger longs go for this week, I have 38.09 and all the way down here at 37.33. Resistance levels for right now is going to be 3,900, so that round number. But I want you to pay attention also to the divergence. I'm using EMA clouds. Those EMA clouds are going to be resistance until they're not. For some reason, if we get over the resistance, your 200 and this 9 EMA here are going to be resistance. Notice that the short trigger is at or around this inside and down formation. It is also confluent and very close to some edges, the cloud, the 200 SMA. So there's a lot of resistance in here, folks. That's all I'm saying. And once again, just because price gets down here to the trigger long does not mean that we necessarily go long. What we want to do is go over to a smaller time frame really quick. And what I'm watching is the TTM Pro. I'm looking for that histogram to line up in order for me to try and take that trade. Okay. Next one, right here, this is going to be a blueprint. It is labeled the 4 hour, but you'll notice on here I have several different zones based on different time frames. So we have a 15-minute supply zone up here. I would expect a resistance. If it were to break through, I'd expect resistance at the 4 hour inside and down. We are creating a 30-minute inside and up formation. I would call this support now because this is not like a strong demand zone. This is just an inside and up formation, and I would expect some support in this area between 71 and 38.40. Okay. Let's go ahead and move on. If it breaks down below that, again, you just come over here to the weekly, and these are the major levels to the downside. All right. Let's go ahead and take a look at the NASDAQ really fast. And we're going to get over here to the weekly once again. Same thing, folks. We're building a lot of supply to the upside. We're going to need a major catalyst to the upside to break through these zones. Timing is a variable. At some point, we could see us break through those, but again, the timing is a variable. Notice that we have inside and down formations forming here. We have major levels to the downside. I annotate and say bears need and bulls need. Bulls need above the supply zone in order for the things to look better for them. Bears, you need instead of just chopping around because both sides are getting busted up. Depending on how you're trading the market, a lot of people are having a hard time. But bears, you really need a clean break. And once again, folks, that clean break to me. You can put on some rails here. I do not prefer to do trend lines. I don't trade off of trend lines. I put them there so that they can resonate with traders and you understand a lot of technical traders use these. So like a clean break would mean that this would have to continue falling. There would be no bounces in here and then we would just continue right down into this demand zone right here. Okay. I would expect buyers in the green. The only way that I see this break in is during a capitulation event, and you'll feel it. It feels different. Soon, if this were to break down, these are the targets right here, annotated to the right, is what I would expect there. Going over to the daily, same thing, folks. This is my blueprint for the daily. We did break below the 200 SMA. You can see if we look left, there's a little bit of support here. We got a bounce there on Friday. And my trigger longs are 11,742 by 11,549. Again, the histogram on the TGM Pro has to line up for me in order for me to want to take these trades. And then to the upside, we got resistance coming in at 11,959 and then a short trigger at 12,133. And again, paying attention to the TTM if price gets up to these upside targets, okay? Next one is going to look a lot like the ES that I showed you. Down here we have a 15-minute support. Like I said, it's trying to build, but there's nothing behind it that tells me that this is a concrete level, whether it's on the ES or NASDAQ. We won't know until we open up tonight. But we have a 15-minute supply zone above at 12,020 and then 12,106. Then we have a 4-hour supply zone up here, and you can see it on that inside and down formation. These are all major levels, folks. Very straightforward how I trade these. If you have any questions, please let me know. But over on the 5-minute, what we'll do is wait for the PMZ to open. Okay. So the pre-market zone, that's what this is. And anyone that is just watching me and following along, the pre-market zone is my bread and butter. This is where we like to take most of our trades. It is very straightforward. It's very mechanical. It tells me the risk. I understand my reward by looking at the automated targets or the targets that I provide. If price breaks above, we look to go long. If price breaks below, we look to go short. It's very, very straightforward. This is what we look at every morning to kind of give us an idea which way we're going to break, okay? If you have any questions, feel free to reach out to me. You guys have an amazing Sunday, and I can't wait to trade with you this week. Have a good day.